Everybody, hope you are doing well halfway through summer here as we move into August. It has been interesting, of course, generally quieter months through the summer months, but the news of the war in Iran definitely moving markets. We had a fairly negative month through July. Definitely some volatility there. Oil prices going up and down. More recently, just to start August here, some positivity in the markets. The hope of a resolution, oil prices coming down, which potentially means inflation coming down, which potentially means interest rates not having to go up to combat that inflation. So markets enjoying that as we rally at the moment. But again, we'll keep it fairly high level here. So advanced decline line, this continues to move higher now, but this is basically showing the amount of stocks moving up versus the amount of stocks moving down on that S&P 500 in the US. And so that trend moving upwards means that there's more stocks moving up. It's not just those big tech companies like we saw a few years ago that are dragging the markets up. Fairly broad rally in the markets as we move forward. As I mentioned, some volatility in there, but we are moving higher as a whole in the markets. And really that's global as well, even though this just shows the US. So why are markets moving up? The net profit margins and the earnings per share continue to move up. The projections going forward continue to get higher. And just listening to an economist report earlier that if we are using some of these valuations and the projections of earnings going forward, markets are actually cheaper now than they were at the beginning of the year based on the projections at that point. So in the US market, especially emerging markets, even more so, but even the Canadian and the rest of the global markets are actually priced cheaper despite having moved up, roughly 10% for the year. Those earning projections have gone up even more than that. So interesting to note that, yes, we've had this rally in the markets and positive markets, but there is more room potentially for growth there. Here's the earnings per share. You can see that continuing to move up, that 2026 estimate, and now moving up again, the 2027 estimates we're seeing in the guidance from companies continuing to grow. And we cracked that $400 level on the earnings per share. Again, leaving room for the markets to move up if those projections keep going, and if those projections are met, those expectations are met, then the markets should continue to move up. Everybody, different side of the story. We're seeing some of the retail stocks. This is, if you go back a few years, those meme stocks, the more popular retail investments that some make, cryptocurrency being added to this. This basket of retail stocks that's well liked by those doing it themselves, individual stocks, definitely falling off. And this can include some of the larger cap tech companies as well that have been popular, as they haven't performed quite as well, especially as a basket. So interesting to note there, picking those individual stocks, and why we lead into more diversified portfolios, a more global exposure. This is another thing that's flipping constantly. This going back a few days, we see that Apple had a rally, whereas a lot of the tech names were down, Nvidia included in that basket. And Apple actually retook the largest company valuation from Nvidia, hitting that $5 trillion mark. Apple has, in the last couple of days, moved down while Nvidia has moved up. So that's flipped a little bit. But why are these companies moving up? It's not just on momentum and hopes for growth. Free cash flow of these companies continues to rise. The returns over the year, you can see versus Oracle there, where Oracle, both companies are spending tons of money, but Apple's free cash flow stays high. Markets like to see that. We've seen some of these companies' cash flow turn negative, extra spending on the AI investment, which may work out for them in the long term. But the market's not loving that. And you can see the returns there on a company that has massive positive free cash flow versus a large negative cash flow, with Oracle moving down over the last year or so. On the oil side, again, the daily prices being tied to the news coming out of the US-Iran war. Of course, when war was back on a couple of weeks ago, oil prices skyrocketing back up again. And now with a potential resolution, oil prices have dropped dramatically just in the last week. But there is some other things to look at, some interesting charts here. You can see the inventories in the oil inventories in the US, lowest that we've seen in recent history here, going back into the 80s. So the reserves are being used up as that Strait of Hormuz continues to be blocked or reduced greatly with the war continuing on. So interesting to watch there. Obviously, as that gets depleted, prices of oils could move up if there's no actual resolution. And other things on the inflation side, we talked about oil being a big part of that inflation picture and why interest rates were potentially going up as oil was increasing. Now, if oil's coming back down, the worry that rates are going to go up is reduced. You can see some of the things that have changed just going back over the last 25 years or so. So overall inflation close to that 100% mark over the 25 years. You can see, hospital services and college tuition, daycare, some of those medical services being some of the more expensive things that have gone up so much more dramatically. You can see on there as well, hourly wages has actually moved up as well. So inflation there, but a good thing if for those earning a wage. Whereas you look at the bottom there, some things actually going negative over the last 25 years. Cell phone services, computer software, some of the toys and TVs, electronics, some of those pieces not really moving as much. So interesting there. I thought I'd share that with you. Yes, inflation's a worry. Yes, it's been higher than the 2% that we're predicting over the last 5 or even 10 years. But it's really a story of two tales there, with a lot of pieces, a lot of groceries and the things that are talked about, the price of gasoline, etc., moving up dramatically, where some others moving down. So depending on what stage of life you're at and what you're spending money on, it could be affecting you differently. Anyway, we'll leave that with you. I'll probably have another one out towards the end of the summer, but hopefully you're able to enjoy some time with family and friends, rest, relax, and don't spend too much time worrying about the daily fluctuations in the market. Keep that portfolio well diversified. And as always, reach out if you have any questions or want help with your investments, financial planning. Thanks a lot. Take care. Everybody.